applying for your first apartment after finally moving out. You have good income, you've saved money, you're getting ready to start the next chapter of your life. But then your application gets denied, all because of a number you've never created and barely understand, your credit score. Although a credit score can appear to be a simple 3-digit number, they're made through hidden systems that analyze financial behaviors, influence major life decisions, and can determine many opportunities that people can receive. As college students entering adulthood, many of us are just now receiving our first jobs, opening credit cards, or even thinking of buying a new car. But many of us don't fully grasp how credit works or how it can really affect our lives. With me looking into off-campus housing and navigating financial responsibilities such as student loans, I have firsthand experience with how credit scores or reports can affect everyday opportunities. Today, I will walk y'all through this in 3 parts. First, I'll explain what credit scores actually measure. Second, how the number is calculated behind the scenes. And finally, how credit scores can impact major financial opportunities throughout our lives. Let's get into it. To start off, we first need to erase the idea that a credit score is just a number and understand what it's actually designed to measure. Nowadays, when people hear the words credit score, they often assume it reflects how much money a person has or how financially successful they are. However, that's not what this number measures. According to the Federal Trade Commission, a credit score is a number that estimates how likely a person is to repay a loan on time. They explain that lenders use this number to decide whether to approve credit and what possible interest rates they'll offer. In other words, lenders aren't really looking at your entire life, but they're definitely checking your patterns. They want to know if you're consistently paying your bills on time, if you manage debt responsibly, and if you borrow money well. For example, imagine 2 people are applying for the same car loan. Both of them are making the same amount of money, but one has a history of making late payments, meanwhile the other pays everything on time. Although their incomes are the same, the credit system looks at them differently. So credit score isn't necessarily about how much money a person makes. It's more so about how well you manage the money you borrow. So now that we understand what a credit score is actually measuring, the next question is, how does this system decide what number to give you? Behind the scenes, credit scores are created by analyzing specific financial behaviors. According to FICO, which is the company whose credit score most lenders use the most, these scores are calculated by using 5 main categories: payment history, the amount you are owed, the amount you owe, the length of your credit history, your credit mix, and your new credit. The most important factor here is payment history. FICO explains that this makes up the largest portion of your score because companies want to know if you're paying your bills on time. This means that even one missed payment can leave a long-lasting impression on how they view you. Another major factor is credit utilization, which refers to how much available credit you're using. FICO states that using a higher percentage of your credit can lower your score because it signals that you rely too much on borrowed money. Basically, if you had a $1,000 credit limit and you used $900 of it, you'd be seen as a higher risk than if you were to use $100 because you're utilizing majority of your resources. So now that we understand how credit is put together, let's talk about how it affects real opportunities in everyday life. Credit score can shape major life decisions without you even realizing it. Many people believe that credit score only matters when you're buying something as big as a house, but they actually start impacting you much earlier than that. According to the Consumer Financial Protection Bureau, your credit doesn't just affect whether you can borrow money, it affects whether you'll end up paying for it. People with a higher credit score are more likely to receive lower interest rates, while people with lower scores pay more over time. For those of us who have already dealt with financial applications, you know that waiting for the answer can almost feel like waiting for a test. Except that this time, instead of checking Moodle for a grade, you're checking to see whether a 3-digit number likes you enough to give you the results that you want. In this case, this means that 2 people borrowing the same amount of money could end up paying completely different amounts over time simply because of their credit scores. Credit scores can affect way more than just loans. The Consumer Financial Protection Bureau explains that landlords may review credit reports when considering rental applications to show that This number can affect opportunities that have nothing to do with taking out a loan. And in some cases, credit histories can even be used for certain jobs, showing that this number can follow people in different aspects of life. Overall, this hidden system matters because it can influence major opportunities long before people fully understand how it works. Today, we looked at what a credit score actually measures, how it is calculated behind the scenes, and how it can impact important decisions like loans, apartments, and other financial opportunities. At the beginning of this speech, I asked you to imagine being denied an apartment because of a number you didn't understand. Now that we can see that this number isn't just random, it's built from patterns in your financial behavior that banks and financial institutions use to make decisions about you. So behind every approval or denial, remember that there is a system working quietly in the background. And that 3-digit number may seem insignificant to you right now, but it has the power to open and close doors throughout your entire future.